The Underground, Ideas into Action presents an Underground Chat, where we bring the underground conversation to you. Today's topic, financial shame, money coaching, and a new movement with Cynthia Campbell, Chief Experience Officer at Balance.
Hi, Cynthia. How are you?
Hi. I'm doing great. Thanks, Susan. Thanks for having me.
You're welcome. You know, we're here in Boulder City, Nevada, and what part of Oklahoma are you broadcasting?
Tulsa, Oklahoma. We just made it through tornadoes last night, and it's a beautiful, sunny 70-degree day. So you would have never known the end was coming last night.
I should laugh. That's,
Yeah.
Okay, so let's talk about the underground and what's happening with financial health, financial wellness. It's interesting because, as you know, when we got together in DC a couple months ago, we talked about Maslow's hierarchy, and we talked about the fact that we need to understand member life stages. And it was an interesting conversation, anywhere from basic food needs to mental health, mental wellness. And I was very taken by your perspective on not only the work that you do, but your belief in making a difference in people's lives. And so I wanted to start with just asking you, what do you think? How's it impacting members today? What kind of range of emotions are you seeing out there?
It's been an interesting time since this all started. You know, we were in DC and it was all brewing in like China, and it's coming. We didn't even know, and we're talking about these base level needs of safety and security, and then boom, this happens. It's really been a platform on which to view a few things. So a couple things are happening when folks are calling in. The need for empathy is higher than ever, first of all, right? I've heard some therapists out there talking about this being a collective traumatic event that we're going through. And we are using words that a lot of our folks calling in are using words that they're overwhelmed, they're afraid, they're exhausted. Like, these are words that are becoming more common in the vocabulary these days because they're holding down a lot, right? And so we see, first of all, when it first hit, this very quiet time, right? Because folks were like, "Ooh, what's going on? I'm working from home. My kids are here now. What am I doing? I am doing all these things." And so there really wasn't time to focus on their finances. They were just trying to survive, figure out what was going on. And then after a few weeks of survival mode and, oh no, this is the new norm, maybe I should be paying more attention, what's going on? And then we started seeing the government come out with the stimulus packages and the CARES Act and all of these things. And then calls started coming in, right? As they were settling into their new normal, as the government started to speak, people started having questions. What's the moratorium on foreclosure? How is the rental? Like, how does it work there? Can I be evicted? How do utilities work? All these questions start coming in as the government starts speaking. So now we're seeing calls rise. But even, and most interesting and also connected to DC, where we started talking about housing first.
Yes.
We're seeing a rise in our housing calls, not only directly to our housing queues, because we're HUD certified housing counselors with foreclosure prevention, but also cross references just from our normal queues where they're done talking about credit reports, they want to talk about something with housing. And so we're just seeing it rise. People are trying to shore up where they live, which makes 100% sense, right? To shore up where you live, make sure you're safe and secure, that base level of Maslow that we talked about 2 very long months ago.
Yeah, isn't that interesting? You know, we talked about the idea of vulnerable collaboration and the willingness for people to really share with each other and care and look beyond the situation. And it sounds like you're hitting all of that right now. What do you think that the biggest concern is going to be as we tackle the new norm? What are you seeing from financial counseling perspective, or how you help people work out of these situations?
Well, I think it depends on the perspective. From the credit union perspective, what we're seeing at Balance, we work with about 400 some odd credit unions and in different ways. And initially when this first hit, we got a lot of our current partners reaching out to us saying, I'm not sure that we're utilizing you 100% the way we should. What are we missing? What can we put in place, now that this is going on, and that sort of thing. And then we had some calls from folks who didn't have things in place. And I think that, eyes are kind of opening up to say, do we have the core competency to handle our membership as the whole person, right? A lot of times in financial industries, maybe we think transactionally. They are this loan or this debit card transaction or this or this, but they're this whole person. And right now, they have a lot of needs that are not unrelated to finance, but not directly finance, but they touch, because social determinants have a lot to do with our money. And so we're going to see that. We're going to need to treat the whole person care. We see that in healthcare these days, right? We should bring that into finance. Whole person financial health. Look at all the things coming at them and be able to speak with them, not just about products, but these very things, real life stuff.
Well, it's interesting about that, because we have been working on social disaster recovery for several years, and we're going to be updating that with the update of people pandemic, because this is really about people. And I'm fascinated with that comment. So I just want to explore it a little bit. One of the things that we've talked about is, what is the distinction? The blurring of the lines. Are we a financial services organization, or are we also cooperative and working within the community? And the way you just described that is, for me, I think the way of the future. I think that's where we're going to see cooperatives, where we're going to see credit unions. So I love that. Very good stuff. Anything to add on that?
I think, they trust us. They are members. They trust us with their paychecks, with their dreams, really, because they're working to pay their homes and to pay for educations and vacations. And we're their partner, not only financially, transactionally with product, because everyone has product. Checking account is a checking account is a checking account. I don't care what the features are. It really, give me a relationship. And as we maybe see branch decline over time, but maybe especially now post-COVID, even more branch decline, branches have to be something different. They have to be about this, talking about real issues and being in a real relationship, not just transactions, right? We have to have a mix of high touch and digital touch.
So you've, one of the things that you've shared with me is the fact that with employees working from home, it's a great opportunity for them to learn more about how to counsel, how to, needs-based, to work with the member. So I want to explore that. And then I also want to ask you the question of, do you think there's anybody that's being forced back underground? Okay. In other words, they're afraid to come forward with their stimulus check, or they're talking to you about, hey, my mortgage is going to become vulnerable here in the next couple months. I mean, what's happening in both of those arenas, and how can we better anticipate it?
Well, I think you hit on a string that I've been researching on my own, and something I'm really interested in is the tie between shame and money. Right. I explore a lot health and wealth, the connection between physical and financial health. But when you add shame to the layer, it's like a mental health issue, right? We have a lot of shame issues around money. I'm 50 and I should have X amount, because that's what 50-year-olds do. And that's how much I should be saved for retirement, or be in that salary cap, or whatever. Shoulda, right? We hold ourselves to this. We have shame. And I think dealing with shame, especially if you work inside of a financial institution, that's where it gets messy, because studies have been shown that there's not much difference between the knowledge base inside and out, but we feel like we should know more and do better because we work in financial institutions. And, I want to give a shout out to the Cornerstone League. They just signed on with Balance, and they're going to take care of financial counseling for all the staff of
Wow.
all the credit unions in their region, hitting home first, making sure our employees are taken care of, because our employees may still be employed by us, credit unions, but their spouses may have lost their job or have reduction in income. You don't know what's going on. They're hurting too.
Wow, that's fascinating. It's interesting because when we do strategic planning, one of the questions I always ask is, when you explore serving, quote unquote, the underserved or different demographics within your market, are you also putting that same test to your employees? And homelessness and childcare and all of those issues, like you said, the whole person. It's very difficult to come forward and say, I'm bouncing a check. And I don't want you to discover that I don't have the financial means. Or we see in some areas where they'll use payday lenders instead of their own credit union. And so it's not just credit unions, banks too, but the whole idea that, it's shame. I haven't thought of that term. I think that's pretty specific, and it's a great way to describe what takes place. I think that could happen at the high end of the hierarchy as well, right? If the market's falling apart and what's happened to my pension, right? Are you seeing it at all levels?
What's interesting about that, I brought it up on one of the happy hour things that I was on. And, when I think back to the 2008 crisis, I was a financial empowerment director at a large credit union. I had lots of people asking me why all the big banks were pulling their credit limits back, right? Because as the housing crisis happened, the big banks were hedging their risk and pulling back their credit limits. Even people with very good credit scores, execs that the credit unions I worked for and places I worked with, everyone was like, what's going on? And so for me, I've been thinking about that in this crisis, when consumers need us so much because they're unemployed and all this is happening. I don't know what credit unions do. Like, I'm sure there's a risk team. They look at that, they can't expose themselves to all this extra risk. If someone has a $30,000 credit limit and now they're unemployed, right? That could be a little tricky, but that person could also be relying on that credit limit as their insurance, or what they thought would be insurance in this situation, right, wrong, or ugly, right? Maybe they should have a savings account, but instead they have available credit at the moment, right? It is what it is. And then all of a sudden that gets truncated and now there is nothing. And so that's the conundrum. We have to hedge the risk inside. We can't just, give it away, but we also have to help the member, right? And so to me, that's an interesting conundrum these days.
Well, that's interesting. We work with a lot of boards on governance, and one of the things that we're focusing on right now is the fact that there's so many quote unquote temporary policy changes taking place. And the question's going to be, how many of those become permanent, right? And the boards have to stay on top of that, right? And when you're talking like this, the boards also, the volunteers, want to be part of the solution. And yet there's so many operational changes taking place that it's hard for them to engage. The way you just said that, community representation, governments will cover some of that and be willing to step up as a board member and say, hey, we need to keep doing this. We need to look at these folks and do the workouts. So, because at some point, NCUA is going to come back in,
Right. Yeah, that temporary measure was a year ago, 2 years ago.
Yeah, exactly.
Got to keep this hard to keep clean, but it is interesting to think about what the new norm will be. Like in policies, in product. I was so impressed to see credit unions pivot so rapidly to figuring out how to serve their members, how to employ their employees in a remote situation. It was really quick. At Balance, we're nationwide, we're remote before all this. And so it was that part was a non-issue. It was just so impressive to see such a large industry pivot in such a really, really impressive way.
And
so at least from where I sat.
No, I absolutely. And I think that they were able to pivot and still serve members, figure out alternatives, be proactive, and be out there in their communities from the standpoint of virtual communication. We're in Boulder City, and we have a credit union here, Boulder Dam Credit Union, and they literally, the average age put them in a situation where they reduced right away to set appointments, but still really focus on educating members. And so it's wonderful to see the responsiveness. What do you think?
Mm-hmm.
You mentioned to me one time that if somebody is, going through foreclosure, they're going through some situation that's going to put them at risk, that, seeking counseling before seeking legal advice
Mm-hmm.
is probably more, is an important step.
Mm-hmm.
Because I know that once they've got an attorney involved, then it's going to change things. Will you tell me about that a
Mm-hmm.
little bit?
Sure. I think we saw it back in 2005 when the bankruptcy laws changed and required financial fitness counseling for the bankruptcy. If they'd already talked to an attorney first, bankruptcy was 99.9% going to happen, because that was the solution. They pretty much decided now they needed to check the box to make sure that counseling happened. If they started with counseling, maybe they learned that there's other options, that bankruptcy wasn't the only option. Maybe a DMP was an option. Maybe restructuring the debt was an option. Maybe there was a lot of options that weren't explored because they decided before they engaged in counseling. So I think when you have a certified counselor who's truly third party, not attached to a financial institution or a product or anything, which is important to find a nonprofit certified agency, talk through the situation with that person. That person will tell you your next step might be to contact an attorney, whether that be for whatever the situation, bankruptcy or otherwise, because there's child support issues, there's alimony issues, there's tax issues. In financial counseling, there's so many people we have to refer out to. We are not tax attorneys, we are not lawyers, but we know when our scope ends and their scope starts. And I think it's healthy to start with a counselor first, so you can understand all the possible players and then approach it that way. If you start with a lawyer, you will have a prescribed way to go, most likely.
That's great advice, and I think that is specific for all of us. I certainly, from my perspective, it was something that I learned, because you do seek protection and sometimes before education. So I thought that was a great point.
That's a good way to say it. Yeah. Mm-hmm.
Yeah.
Maybe educate first, real quick, and then protect. Right?
No, but I think it's really true. We have a tendency when we get into a fearful situation, we obviously want to be protective, and so we'll close off.
Yeah.
So I just I remember, there's bits and pieces that come back to me with your presentations and what you've done through the years. When I look at kind of proactive members, what should we be doing right now? If you were to give advice to me as a consumer, to anyone as a consumer, are there some things that we should be doing?
Yeah, I think so. And I think we can parallel it to how credit unions can help their members do these things too. Being at balance, where we are financial counselors and coaches and educators. So we know how to run from catastrophe to catastrophe. We were there in Katrina. We are there in the fires and the earthquakes. We were there in the tornadoes in Oklahoma. We're there in government shutdowns, and now COVID. And from our point of view, both for the member and the credit union, it would be really nice to not run from emergency to emergency. It would be really nice to shore up financial health between the emergencies, so that when the next emergency hits, it's not so much of a, you can weather the storm when you are planned out, right? Think about when I was a young girl and I had no margin and I got a flat tire. It was the end of my world. Oh my God, now I got to work an extra shift and now I get a flat tire and I'm like, oh great, I'm glad I have an emergency fund. Let me call AAA and sit here and drink Diet Coke while I wait, right? It's a little bit different. And so I think that's, we really have to approach it that way. Be open to all sorts of ways of looking at things and really develop a financial health plan for our members. If I'm a member, a consumer, I'm looking at it this way. Oh crap, this didn't hit me too well this time. What can I do now? Well, I'm going to pay down my debt. I'm going to shore up my emergency fund. I'm going to really look at wants and needs. I'm going to, you're going to assess, stabilize, prioritize, right? And then move forward.
I love that. What we advocate is to take the disaster recovery plans, which so often we're focused on, some type of interruption business interruption.
Mm-hmm.
And what we've done is we've added that social disaster component to it. What are the top 10 things or the top 15 things we should be doing for members? I'd be fascinated for us, and this is something that we'll follow up on, but the idea of creating the top 10 things for members. Because out of each of those disasters you refer to, we focused on the credit union and what the credit union needs to do. But you're also mentioning now, what could we be educating our members about? Because people are going, like you said, the new norm. We're trying to figure out going back to work. How are we going to be in restaurants? How are we going to be in bowling alleys? The reality is all of these how-tos, well, starting with how-to on our financials might be the top of the list. That might be a very high priority and a differentiator.
It definitely feeds a lot of the other things, right?
Yeah,
if we're going to think about what our new norm is, the money that feeds the new norm is a definitely great place to start. I was just doing a webinar for a credit union down in Georgia this morning, and just talking about why financial education. I think, it fits into the running from catastrophe to catastrophe. I think we have this connotation around financial counseling that it's a bad thing. It's bad. If you need it, you must be doing poorly. Well, let's just think about marriage counseling for a minute, right? Some of I'm not married, but I know some great marriages. And what I've heard is that they've gone through marriage counseling, and that's why they're great, because they've learned to communicate and be on the same page, and they got help when they needed it. And it's not, so taboo to have that. And these days we have life coaches. Why not have a money coach? It doesn't mean that, you're in this bad situation. It just means you want to fuel your dreams and your goals faster. You want professional help in getting what you want out of life, right? It doesn't have to be this dirty little thing we do when we're bad.
I love that. The whole idea that there's a stigma associated with asking for help. Okay. I think that, a money coach sounds very comfortable to me. It's the idea that I'm going to speak with sometimes when I hear, financial education, I hear some of those terms, or financial literacy, I feel like, okay, that means that I'm not literate, right? It's really got that negative. But you say financial coaching, all of us at different points, and especially in life stages, right? Because everybody enters into a different stage in life, and the question is, what does that mean to all of us? Very good.
Right. Yeah.
Wow, that's
words matter, right? Words matter.
And
counseling, maybe not so much. Coaching, better. Yeah, for sure. But I love that life coaching has become a thing, because I think it's made everyone more friendly to getting the help we need. We don't have all the answers. We're human beings. We get through this together.
No, it's really true. And being vulnerable. I know that when we sold our company, I went through this whole period of feeling like I let people down, and I felt like I didn't reach out in the same way. And my clients are saying, what's going to happen? And so there was a lot of uncertainty. And I reached out, and I had a life coach. It's okay to want to talk with somebody and have them focus on you.
Absolutely.
Because all of those that we love, all of our environments, right? Yeah. So that's great. Thank you for bringing that up. I really think that that's, important. Well, what do you think the top 3 ideas are? What would you like to see people put into action?
For the individual, maybe I'll just give a couple for the individual and one for the credit unions. The individual, honestly, the best thing you can possibly do is to do a quick financial review. Look at what you have going on. Just, some people call it that come to Jesus meeting or whatever it is. Just, an honest accounting for what's going on. Awareness, they say, is half the battle. So put it on the paper, see where you stand, and then make a plan. I can tell you step 2 for me is really to shore up a small emergency fund so that you're not having the worry about, do I need credit if something goes wrong? So really an assessment, a framework of where you're at, and then really start on that emergency fund. And then next, I would check your credit report. There's a lot going on right now with COVID and different concessions. And if you're benefactor, if you're getting any of those, you want to make sure it's reporting right on your credit report. If a creditor says you have 3 months of interest only, you want to make sure it reports right on your credit report, right? And that's why during COVID, annualcreditreport.com is giving us once a week if we want it. Seems like a lot to me, but if you want to check it once a week, you can. But if you're getting special concessions or mortgage rewrites or any, loan extensions or forbearances, you want to make sure that's reporting correctly on your credit report. And unfortunately, identity thieves are really extra active during times like this of turmoil and chaos. So stay extra vigilant on passwords and that sort of thing. So credit report will show you if that's happening. So I would say that, framework, and then really, looking at that, credit report as well. So, and for credit unions, we have a credit union movement already. I would love to see a financial health movement inside of credit unions so that it's not just a check mark. We have that department, or we do these things in the community, but that really it's a movement so that inside the credit union, it's not just, oh, we have a financial educator, but, oh, in lending, this is the way we address financial health. In collections, this is the way we address financial health. In our loan application process, this is the way we do it. It can actually trickle down through all operations. That way, every department is addressing the member's health throughout the whole organization, not in a silo over here marked financial education. It doesn't work that way because we're, again, not treating the whole person.
No, and I think it is a cultural thing. I think you're absolutely right. It's it's part of a culture. It's part, if you approach it from a whole credit union, a whole person perspective, then you literally are dealing with this being part of your cornerstone in your culture. And if you think about it, I don't think that this is something that's just a response to a disaster. Obviously, it's heightened it. Obviously, it's created fear. But as we're settling into whatever this new norm is that we're dealing with, I think we're all more cognizant of how important it is that we control our own and work with our partners, our trusted partners, to make that happen. As we kind of review this, I think that from my perspective, you've got some jewels that you've shared with us today. I love the idea of calling it like it is. I mean, there is shame associated with not being able to pay, not being able to feed your family. There are 159 million people at risk around the world now for starvation. And that was, a few days ago. So when we look at what we're dealing with here, it almost can be overwhelming. So starting with the individual and addressing it. And then you also said, having options when it comes to counseling and making sure that you know what those are. And so education before protection. And then I think it does start at home. And so us individually and our employees, all of those things are, I can't be giving somebody else financial coaching if I'm, embarrassed by my own scenario. It's very difficult.
Would you go to a doctor who smokes?
You're right. It's true. I guess we could go back
to take our own
on a few of those, couldn't we?
Right. Right. And I think it's fun because credit unions, a lot of them, so many credit unions have done the hard work of getting employees trained in how to counsel people through CUNA's program, through our program, other programs out there too, or homegrown programs. But it's interesting, when the crisis hit, we got a few calls that were like, we went through the training, but how do you do it?
Yeah.
Book learning and practical is different.
Applied learning. That's one of the things. How do we actually learn and we apply it? And so now we're being asked to apply it. And it's like, okay, I went through this training. Where are the steps? Where's the guide? And I think you're right. It starts with the heart,
It does. Empathy.
Yeah, if we've got the heart for it, if we believe that we can make a difference, then we'll figure out the tools. So, the idea of creating a financial health movement, I would, the whole idea of having a financial coach and understanding that people are actually being trained to be coaches
Mm-hmm.
just resonates for me. So I just, so often when we do the underground, we are thought leaders. And so we're creating thoughts. And then we walk away from it and people say, oh, that was great conversation, but what do I do with it? And that's really what you said. Is that, you know, you have to then start to execute. You have to take these ideas and turn them into action and summarize the points to make it happen. So that's great. So what's the new norm for you? What are you looking forward to?
Yes, for sure. Seeing credit union friends, it was really hard that COVID hit in the middle of the spring credit union conference season because I think I had 3 or 4 lined up, and I always love seeing my friends. I mean, it was great to be at GAC and get a good dose of friendship in up front, but I'm ready to get back out there so badly. So there's that, and just having board meetings in person versus over the Zoom. But I have loved doing yoga via Zoom, and it saves me all this travel time of getting to the studio and getting home. I can just wake up, roll out of bed, and go to yoga. Like, I might keep that.
I know. I actually had my yoga instructor do like a video. And so we're doing like a video exchange, so I can do it whenever, based on my schedule.
Yeah, awesome.
So that's so cool. You're right. Things going to change on us, So,
absolutely. Well, it's always so good talking to you. I appreciate what you do for the credit union movement, the way you really look at issues and bring them up and talk about them in ways that maybe we're used to talking about them at dinner after the conference with our close friends. I think you try to bring that conversation more broadly, and that can be scary, but man, that's where the juice is. I love these conversations with you personally, with your underground stuff, with your staff. This is the good stuff. I could nerd out on this all day long. So thank you for inviting me. And anytime you want to talk on video or not, you give me a holler.
Well, that's wonderful. And my thanks to the Balance crew. You guys are doing wonderful work. And I think you change lives every time you have a phone call. And I'm so excited to see the work you're doing with staff. I'll be in touch. I'm very interested to see how that all happens. Okay?
All right. Sounds good.
Thank you.
Thank you.
Okay.
Bye.
Bye.